Got some business news for you now. We're starting with what could be, anyway, some bad news for France. They've lost the AAA gold standard of yet another ratings agency, haven't they, Will?
That's right, and it's Moodys is the one taking the rug out from underneath France this time, moving it down from AAA to AA1. And it's, of course, nearly a year on from Standard & Poor's doing the same thing. Let's take a look at what reaction we've got so far from the French political establishment.
Losing its top credit rating for the second time this year, Moody's ratings agency downgraded French debt one notch to AA1. In the wake of the news, the euro dropped 0.2% against the dollar. In January, Standard & Poor's also stripped its AAA rating away from France. Moody's made the decision only days after the Élysée announced new reforms, signaling that they might not be radical enough. The country's finance minister tried to quell doubts.
Let me put the Moody's decision into context. The downgrade does not call into question the economic fundamentals of our country, nor the reforms that are being undertaken by our government, nor France's standing.
Optimism, but Moody's remained skeptical. The ratings agency gave France a negative outlook, meaning more downgrades could be on the way. The French economy has failed to grow for 3 straight quarters, and unemployment is at a 13-year high. French President François Hollande was elected this year, pledging growth and ending austerity measures, but analysts say he must accelerate reforms to boost competitiveness and loosen labor laws. France is the Eurozone's second largest economy behind Germany, and the downgrade raises fears the region's debt crisis is worsening.
So, well, I suppose the crucial question is, how much of an impact is this actually going to have now?
Well, Moody's says that the downgrade is linked to lower growth prospects for France and, of course, its involvement in the Eurozone debt crisis. And there is a risk that if France isn't able to borrow at quite such good rates, if this has an effect on that, then it really would call into question its role in the Eurozone crisis, because all of these bailouts for Greece, for Spain, for Ireland, they're all based on the fact that France and, of course, Germany can borrow at very low rates. So far this morning, there's been very little change in the rate of France's borrowing. And, of course, if we look back to last January, when Standard & Poor's downgraded France, it had relatively little effect then as well. So hopefully we should see very little change in France's borrowing costs, as it didn't have too much effect for the United States either in 2011, when the US lost its AAA as well, AAA too.
OK, well, what about the markets? Are they worried about it at all?
Well, they've been rather concerned about a number of factors. Let's take a look at how things have been going on in Asia. At the start of the session, there was optimism carrying over from the US session. The fiscal cliff, of course, you remember that a series of tax cuts and tax rises and spending cuts. There was optimism that will be solved by US policymakers, but you can see the session ended not quite on such a good note, perhaps not helped by France's downgrade. And let's take a look at how things are opening up in Europe. Even more pessimistic here. There are also worries about Greece, in fact, which could weigh on things, but perhaps the AAA not helping either.
OK, yeah, as you say, we've done France. Let's do a couple of other countries. Start with Greece, shall we?
Well, that's going to be talked about today by European finance ministers. Greece is hoping to get through the latest tranche of its bailout funds. 31 billion euros are on the cards here to keep Greece ticking over. It was expected to be agreed last week by Eurozone finance ministers, but they couldn't come to an agreement. The sticking point was over whether Greece should be given any more time to deal with its debts and pay them down. But Greece has just in the last 24 hours put in place some more austerity measures. They say that automatic cuts will come into effect for any departments in the Greek government that don't meet their spending targets. So hopefully this will be enough to secure the agreement of Eurozone finance ministers today.
Where should we try next? How do you fancy Portugal?
Bit of better news there as far as they're concerned. Portugal has done its bit to get its latest €2.5 billion aid tranche, so going through much more easily than in Greece. It doesn't mean, of course, that things are all done and dusted in Portugal. Things are very much still a worry there, with the fact that concerns that austerity measures are choking the economy, of course, in its third year of recession.
OK, well, let's come back to France now, shall we? The car maker Peugeot Citroën in dire straits, of course, at the moment here in Europe. That's why recently it's been looking a little further afield to try to get back in the black. William Hildebrandt explains.
Peugeot Citroën is one of the first names that comes to mind when you think of French industry. It's the largest automaker in France and the second largest in Europe. So should it come as any surprise that the group is focusing on China? Yes and no. A Eurozone debt crisis has dampened sales. The group forecasts its European sales to drop 8%, including 12% on its home turf. But back east, executives say there's no shortage of demand.
We have confidence in China's auto market, which has become the world's largest and will continue to grow. Currently, China has around 50 cars per every 1,000 people, compared with the world average of 200. Therefore, we expect China to maintain a 10% growth rate each year for a long time to come.
Chasing Chinese consumers isn't reinventing the wheel, but it could be sound business. By 2015, Peugeot Citroën plans to sell nearly 1 million cars annually in China, including 200,000 Citroën DS cars that will be angled as an upmarket brand of its own. With the European market contracting, the group's been burning through 200 million euros in cash per month. In July, it announced a plan to cut 8,000 jobs at its French plants. As it sharpens its focus for the Asian market, Peugeot Citroën plans to open new research and development centers in China, in addition to the existing one in Shanghai.
Now, it's Thanksgiving in the US this Thursday, but apparently some people are camping out in a car park rather than getting ready to eat turkey with their family. Is that right?
Yeah, this is part of a US tradition called Black Friday. This is the day after Thanksgiving, which traditionally is seen as a sort of real kick-off for Christmas holiday sales, for shopping, etc. So you get a lot of bargains basically on Black Friday for electronic goods, for all sorts of things. These people have been camping out. This is Monday. These people are camping out, ready for sales on Friday. So they're really preparing. I'd rather be waiting for my turkey, I have to say myself. But one of the guys interviewed actually said he does this every year and he regrets it every time. I'm not surprised.
Well, you would have thought he would have learned by now, doesn't it? Seems to me like they've got a little bit too much time on their hands. That's not the case, though, for most Americans, is it?
No, it's not. Well, according to Expedia, they've done a survey of holiday levels around the world in 22 countries. And actually, the US doesn't come out that well. They generally take around 10 days a year of an average of... they get 12 days off, and so they don't tend to use 2 of those days. Yeah. But it's better than in Japan, where they tend to get an average of 13 days off, but only take 5 of them.
Oh, my goodness.
Terrible, eh? Now, what do you reckon? France, of course, doesn't... Where do you think they rate?
Probably quite highly.
They're at the top.
At the top?
Along with Spain and Brazil, 30 days of holiday is the average. You can see there the countries in red, the least holiday, going through yellow and green, and of course France in the green there. But yeah, 30 days of holiday for French people. But I was looking at GDP competitivity per capita, and actually France generally rates
quite well.
one place above Japan.
There you go, there's your answer.
So
your GDP isn't that good. Give yourself more holiday. William, thank you very much. Will Edwards with the business here on France 24. Just before we go, we're going to bring you some breaking news which is just coming into us here at France 24. In fact, we're hearing that mortar fires hit the Syrian Information Ministry, causing damage but apparently no casualties. This is according to Syrian state television. So that's mortar fire hitting the Syrian Information Ministry, causing damage there but no casualties. That's the latest information coming in from Syrian state television. We'll bring you more on that, of course, as we get it. Claire will have the very latest news after the break.